Yes, guys and girls, welcome. So I'm just going to do this quick little, educational video per se on why myself and Drew and our members took a short-term pound US dollar. There was a lot of speculation per se on is the dollar actually going to short, or is it just going to continue to fly and fly and fly? So in terms of flying, I'm talking about like all of this price action. And I'll tell you as to why that was actually, really bullish and there was hardly any pullbacks. This is the only half decent pullback that we had. And then it pretty much got soaked up and just got, kept flying. So firstly, we have to understand that with our trading style, it is, mostly fundamentals, 90% fundamentals, 80% fundamentals, but I'm pointing toward 90% now. 90% fundamentals, 10% technicals. And I'll basically show you or tell you how we understood our pound US dollar chart. So firstly, you have to understand that you are trading, the United Kingdom or the British pound against the US or the US dollar. You first have to understand what is happening in each one of those economies. So let's talk about the pound at the moment. So we have to understand with the pound, or the UK, shall we say, they were going through a bit of a struggle with their growth. There's all these talks up from around this point here of, the Bank of England hiking, early November time. And the front end markets or the front end gilts, the gilts is the UK's front end. The gilts in the UK were actually flying based on the back of, speculation that the Bank of England are going to step forward and hike their rates. And generally, when a central bank hikes their rates, you generally see a fairly strong positive, move from the currency. But our view, so we basically suggested at Beau Monde, so I think it was around this point here. So when the price action for pound US dollar was like this, when myself and Drew, we done our little fundamental breakdown and technical breakdown, we basically suggested that, we wanted to be selling the pound US dollar, even though we were saying, all this pricing in the front end, I think it was like around like this. All of this move is just the front end pricing in a rate hike. And this, the Bank of England is trying to hike into a slowing economy. And that's not actually a good thing. We had low GDP, GDP that isn't, expanding at the rate that it should be to want a rate hike. We had, inflation that actually moved lower that month, you generally hike into a strong or growing economy and price pressures that are remaining persistent, So for example, a good little example right now is, New Zealand, who actually hiked their rates because of price pressures, so i.e. inflation, and their employment, their growth market is actually very, very good, even though they were in lockdown for a long time. And this is why, myself and Drew especially, Drew loves looking at this pair. New Zealand is one to look out for, and we expect a lot of, positivity to come out of New Zealand dollar, especially against those risk-off economies. So, the Bank of England were talking up all these rate hikes, and we saw all of this bullish momentum. So our thesis was, our first point of interest. So we had 2 points of interest. We had this one here, this daily order block, and it came into that daily order block, and he actually rejected it. So that was the rejection that we had. It was good, and was okay, great. So we were in profit. Stops at break even, and if it just comes back up again, which it actually did, of course, if you've been following GU, it came out and took us out of break even. So not an issue, because we haven't actually lost any money there. Our second point of interest was this daily order block here, nice and simple. We don't need to overcomplicate trades. Trading shouldn't be complicated. It should be as easy as you can make it, really. If you overcomplicate it by drawing a load of lines and a load of, I don't know what people like to use, it's just going to overcomplicate. It's just going to make it much more toxic to trade it. So we understood that all of this buying momentum, let's just reverse it slightly back. Let's reverse it to this one here. So we understood that the Bank of England were trying to hike into an inflationary worries rather than growth and inflation at the same time. So, there wasn't high employment. The GDP actually was falling, or it wasn't moving at the rate that it should be. Inflation actually came out less than anticipated. Governor Bailey was was talking it up, saying, oh, we need to hike, this inflation is getting out of control, we need to hike now. And, you know, this was all creating all the front end market to be buying up the pound, you know, because they want to get ahead. And if they did hike into positive growth and higher inflation, you know, then we would have seen much higher pushes up for the pound. You know, we would have seen this, or we would have seen this push higher, break above this high, and then we would have seen some type of exhaustion, so a pullback, and then move up into the highs again, you know. But we aren't actually seeing that right now, and we actually identified this. So this is our second point of interest. And of course, you know, the pound is, or the United Kingdom is entering per se, an interesting period. So we understood that the Bank of England was hiking. We understood that, you know, there was these political headwinds that were on for the pound. You know, we had, you know, the Northern Ireland trade deal, which we said right at the start of Beau Monde, you know, right at the start of September, that this is going to be a major headwind for the pound, and we need to keep an eye on it, you know. So we identified that this situation with the euro and the UK was actually getting, you know, much worse in terms of what was being said. So, you know, and of course, right now, as of present day, you know, there's the worries of the UK actually invoking Article 16, which should, you know, weaken the pound even more than it is. So, you know, we had this worry of the Bank of England hiking into inflation worries rather than growth. That's actually going to hurt, you know, the economy. We then had fiscal tightening, so, you know, the potential of the government actually raising taxes. And, you know, with an economy that isn't actually growing at the rate that it should be, you know, you really shouldn't be hiking taxes at that point. And even hiking interest rates as well, you know, this is such a bad, you know, mix for an economy that isn't up to scratch. And of course, we understand that the Brexit related tail risk there, you know, the political worries normally always outstunt monetary policy and fiscal. I.e., if we look at, I think 2016 is right around Brexit. Brexit came out, and look how much it weakened the pound, you know, against the US dollar. And of course, if we look at it against other economies, Japanese yen or the Australian dollar, it's pretty much the same, you know. Political issues generally always outstunt, you know, monetary policy and fiscal policies and anything along those lines. So this is our view on the pound US dollar, you know. This is our second point of interest. And we actually saw a bit of a rejection, you know, we saw that. And this is, you know, this is interesting for us. You know, we had, as we've marked out here, you know, this equal high that was created. Click on the 4 hour, you could probably see it better in the 1 hour. You know, we saw these highs being created, and we identified, of course, if for those who trade like smart money and stuff, you know, there's a bit of liquidity there. And we were actually trying to think, okay, well, there's a bit of liquidity there. We might see, you know, GU actually pump into that, take it out and move away from it. So our second point after that, if it did take the liquidity out, is, let's wait for this to load. So it was actually this 4 hour buy candle that took out the liquidity or the highs up here and then sold off. So this created an order block. And of course, we were expecting, if it did push higher, just to wick into that and sell off. So you could understand that our positioning, you know, is constantly thinking sells. We were disregarding all of this bullish momentum, you know, had people at this stage here. So when GU was right around this point here, people were like, why aren't you selling the pound? If you look at the trend, it's clearly uptrending. And, you know, you have to look at the higher time frames. The high time frames always stunts the lower time frame. Of course, they work in tandem. You know, we want to see a break of structure in the lower time frame to warrant that this area is the correct area that it's moving away from. But, you know, always look at those higher time frames to identify. Even if you weren't looking at fundamentals, you know, what is the higher time frame telling you? You know, it's clearly downtrending here. It's clearly downtrending. So why would you want to be buying? You know, this is the outlook you should be having. So, you know, this is what we were seeing. So let me just fast forward. We saw that. So that was quite nice. So of course we entered the sell here, or I entered here with lower risk just to reevaluate the position, because if it does wick up, you know, I'm not, you know, 3% down on that trade, you know. So it wasn't too much of an issue then. I then just waited for it to break more structure. So if I just slow this down a bit so that we can get into it. So then broke all this structure down here. Can we speed up a bit more? Cool. Right, let's wait for this to, I don't want to speed up even more. There we go. So you see all this, and then I entered the sell here. So I entered one about here and then one about here. So, you know, even if you saw this and you were a technical trader, you know, it created equal lows here. And of course, you know, it created that liquidity there to try and hunt. And of course, we understood that we want to be selling the pound US dollar, you know, potential Brexit related tail risk, a Bank of England who are hiking into price pressures rather than growth and price pressures. And, you know, we had just growth that weren't up to scratch anymore. And we weren't seeing, you know, that employment or the labor market actually recovering as it should be, you know, inflation worries that weren't actually in the forefront, you know, actually fell, and GDP that was you know, moving at the rate that it should be in terms of what the Bank of England was forecasting. So, you know, all this was just adding on to a selling bias for us on pound US dollar. And of course, you know, the Bank of England came out, when was it? Let me just try and, we would see the really negative sentiment. There we go. So the Bank of England then came out and actually held rates. I think, yeah, definitely, yeah, it was the 4th. Came out and held rates, and of course, if you've been following it, you know, the Governor Bailey was actually one of the people who moved over to holding rates. So, you know, he was bigging up the pound, or bigging up that they need to hike as soon as possible. And, you know, this inflation is going to get out of control. And, you know, he then moved over to the more dovish side of holding rates. And, you know, and the markets then just saw that as, you know, a Governor Bailey or a central banker who, you know, can't be trusted anymore. And, you know, that's what happened with the pound, you know, massive unwind of the front end, massive unwind of gilts. People were then, you know, reevaluating positions. And as of right now, this is the current price action. Only some buying action might have just came from dollar weakness rather than pound strength. You know, there's the large, per se, or the Bank of England is largely expected to hike in December. But, you know, or that is largely priced in now. And even if that is being priced in, you know, there's hardly been any, you know, movement in the currency or in the pair to suggest that, you know, a lot of traders are expecting positivity from this. You know, we have a large amount of options expiries at about 131. So, you know, a lot of traders who have sold into those puts on GU, you know, will be out of the money, and this isn't a good thing. It'll be, I think, millions, hundreds and hundreds of millions, even into the billions of options expiries that lies around 131. You know, we have Brexit or the UK, who's actually trying to invoke Article 16. And of course, as I mentioned at the start, this is not a positive sign for the UK or for the currency, shall I say, and of course the UK. So, you know, this isn't a good thing. And of course, we have the likes of like Goldman and Citi and HSBC, you know, all looking to short the pound, and this is what we should be doing at the moment. You know, at some point, our bias will switch. You know, once we see faster growth, faster economic growth, I'm personally waiting for a couple more months of stronger growth to warrant a switch in bias, because at that point, you know, the UK would be ahead of most economies, you know, with the hiking cycle, and now they're actually hiking into stronger growth rather than just price pressures, i.e. the inflation. So, you know, that's our view on the pound US dollar at the moment. I'm personally aiming for about 132 to 130. Anywhere within there is when I'm going to be taking out most of my position and just reevaluating. For those who don't really or want to be following what's happening up in the markets at the moment, you know, the ones to look out for is these currencies. So if you're looking to trade, ones that are actually of interest to us at the moment are NOK, Canadian dollar. We've got oil. Of course, that's not a currency, but yeah, it's a commodity. That's something to look out for. You know, oil has been largely priced in of the SPR reserve, SPR release. You know, that's something of interest to us. Just look at an oil chart right now, and you'll see what pricing is of, you know, all this weakness is just traders just reevaluating positions. You know, just if they expect the US to to step in and actually release more oil. That should create lower prices. You know, markets buy the rumor and sell the facts, or in this scenario, sell the rumor. So, you know, they buy into that rumor that they're actually going to do it, a joint effort of the US and China, adding more supply to oil because OPEC isn't. And that creates, you know, an unhealthy environment for higher prices of oil and WTI and Brent falls. So, you know, oil, CAD and NOK, you know, we got New Zealand dollar, something of interest. You know, Drew loves focusing on New Zealand dollar and Australian dollar. We've actually stepped away from Australian dollar for now, just letting it do its thing, you know, just pairing it against other currencies. We're not actually focusing on it too much right now. You know, euro is actually entering a very, very interesting period. You know, if you want to understand just the fundamentals behind the euro, just look at what they're, the main thing right now is, of course, President Lagarde not actually bringing forward any rate hike expectations, actually pushing back, and that's creating some weakness. And of course, we have you know, the lockdowns in Austria and the potential lockdown in Germany that's causing the unease. You know, it just basically means, to put it most simply, is if they go into lockdown, it just means, you know, the ECB is able to become more accommodative for longer, and that's not a positive sign for the currency. And as a result, you're seeing the likes of like euro dollar, you know, shorting down into oblivion. You know, traders are largely expecting 112 now, could even break that, to be honest with you. I think it all depends on what happens with the US dollar more than anything at this stage. You know, largely, a lot of euro weakness has been largely priced in already. So I think it's all dependent on is the Fed actually going to bring forward rate hike expectations? Because, you know, we have inflation in the US at the moment at about 6.2%. So, you know, very, very high, and you know, it's not a good sign for an economy to just continue to have high inflation. So, you know, that's our view on pound US dollar. Of course, we have a load of other trades to go over. I'm not going to go over it now, of course. You know, we have a lot of open positions, CAD positions, New Zealand that we're expecting. You know, New Zealand's actually expected to hike rates next week. And that's something of interest to us as New Zealand dollar long traders. But you know, it's all a game at the end of the day. You know, just be patient with it. You know, trading should be just about, you know, being patient and being consistent. That's literally it. Trade, you can't expect to pick up trading over after 1 month or after 3 months. You have to be consistent. You have to be, you know, patient. And not a lot of traders like being patient, of course, and that's why they like to be the in and out scalping traders. And you know, I personally don't like it. I tried it once when I started. You know, I was trading at 1 hour to 15-minute time frames, 30-minute time frames. I just hated it. You know, so you know, you develop as a trader, and I'm sure you'll all be successful as long as you're consistent. So yeah, that's our view on pound US dollar. We largely expect it to remain, you know, a sell-off in our opinion. If it pushes up into even all these highs up here, of course we'll reevaluate and think, okay, why is that pushing up? You know, but we don't expect that. That's just our personal opinion. So you know, you just be careful with it. You know, so any selling, just any pullback, shall we say, is sell on the dip or buy on the dip. You know, buy the US dollar on the dip against the pound, i.e. sell GU. Is our opinion. So, you know, we expect 132 to 130 to be our price. And of course, we can reevaluate our position. You know, if it gets down to here and we see really good growth from the UK, you know, the potential, you know, tail risk of the ECB, or not the ECB, sorry, the Northern Ireland trade deal, you know, that's starting to dissipate and go away, then of course our bias will switch. But for now, we're largely selling the pound against US dollar, against other economies like the Japanese yen. You know, we're not going to give you a bias on those, but I'm sure if you do the fundamentals behind, you know, Japanese yen, the Australian dollar, New Zealand dollar, you can have your bias, you know. But yeah, that's just myself on pound US dollar and myself and Drew's view on it. If you learn anything, just let us know. If you want to see this more often, just message us and we'll do it. So take care, guys. Hopefully that helps. And you know, if you want to see more, just let us know.